How does real estate and capital gains tie together? Hi, I'm Nicole Majors with the B Major team of eXp Realty, and I am bringing to you some information in regards to capital gains and how it might affect you. So we're going to talk about a couple scenarios. Scenario number one is that you own and you sell your primary residence. If you're single and you have income up to $250,000, then there's no tax on that. Above that, it's taxed. If you're married, you have $500,000. So we do have a lot of space here to work with that if you do sell your primary residence and you make an income, if you have those two numbers there to work with. Other than that, anything above and beyond that would be taxed as ordinary income, just like how you get taxed for your job. So usually it's like up to 20%. So that is one scenario. Scenario number two, you sell an investment property. If you've owned it for less than a year, like you bought a home and you decided just to flip it and sell it and it's less than a year, then that is actually taxed as ordinary income. If it's more than a year, then that is taxed as a capital gains. So what do you do with that capital gains? Well, you've got some options here. Your options are just to pay the man, like typically it's like up to 20%. If you just want to just take that money, 20%, set it aside and just pay the government, then you can totally do that. Another option, which a lot of my clients do, is invest in another investment property. So what happens is we go to a 1031 exchange company, and this is what we call a 1031 tax deferred exchange. And you take that money, and let's just say it's $500,000 that you have as a capital gains. You deposit it into this account with this company, and then you have a certain amount of time, 45 days, to claim another piece of property and get closed on it. And you don't have to pay the taxes as long as the property you're purchasing is of equal or higher value of the money that you have. So we just have to make sure that we're spending the right amount of money. Now, I just want to remind you that this is we call it a 1031 exchange, but it's a 1031 tax deferred exchange. It doesn't mean that you completely get out of paying taxes. It just means that we're deferring it from one investment to another. Now, some people will eventually sell like 5, 10, 20 years down the road. You still have to pay that tax that has been deferred. Or you can do what a lot of clients do, which is what we call swap till you drop kind of a situation. Just keep investing in rental properties and doing the same thing until you die. And then if your kids inherit it, of course, then for them, it's a tax-free situation. So those are just a couple options that we do have. If you have an investment property or you're thinking of selling your primary residence or selling an investment property, I do have a local company that we do use for a 1031 tax exchange. I'm happy to get you that information so that we can talk that through and see what the best route is for you and your property. As always, you're welcome to contact us anytime. Office number is 850-227-4455. You can always drop a comment in here. Give me a call on my cell, 850-247-8415. And as always, we'll talk soon.